Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So ARK Invest released their highly anticipated Big Ideas 2021 report yesterday. In this video, I'm going to be going through their section specifically on electric vehicles and autonomous ride-hailing, aka Robotaxis. Big shout out to Tesla. Now just for the record, if last year you'd read ARK Invest Big Ideas 2020 report, focusing on the sections relating to EVs and Robotaxis, you may have decided after reading that research to invest in Tesla stock. No further comment necessary. And what a difference a year can make. Cathie Wood and co at ARK Invest have gone from laughing stock of the investment world to absolute rock stars, justifiably so. So in this video, we'll examine ARK Invest research into the electric vehicle marketplace and the autonomous ride-hailing / robotaxi market, including potential market capitalizations of companies involved, future revenues and profits, and plenty more. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. Here we are, ARK Invest's Big Ideas 2021. Now, as I mentioned, we're just going to be focusing on electric vehicles and autonomous ride-hailing in this video. There's a link in the description to the full report. I highly recommend you guys and girls check it out, although it is well in excess of 100 pages, and I know most of you are lazy motherfuckers. Electric vehicles. EV sales should accelerate significantly. No shit, Sherlock. Electric vehicles are approaching sticker price parity with gas-powered cars. Leaders in the EV market are developing innovative battery designs to enable longer range vehicles at lower costs. By the way, when ARK says leaders in the EV market, they pretty much mean Tesla, in my opinion. Based on Wright's law, ARK forecasts that EV sales should increase roughly 20-fold from 2.2 million vehicles in 2020 to 40 million units in 2025, as in 2025, it's now 2021, guys, just putting that out there. We believe the biggest downside risk to our forecast is whether traditional automakers can transition successfully to electric and autonomous vehicles. Now, that's a fairly ominous statement. The sub-communication here is that legacy automotive manufacturers may not successfully survive the transition to EVs, aka they go bankrupt and out of business. And if that's the case, global EV sales may grow slower than you would hope simply because there's not enough automotive manufacturers left in business to actually produce the EVs. And again, we circle back to Tesla. This is why I'm so focused on how quickly Tesla can ramp production, because as I've said a million times, Tesla will sell every vehicle they produce for years to come. The limiting factor is their production. It is not demand. Electric vehicle sales have taken share in good times and tough times. While sales of gas-powered vehicles decreased during the recent pandemic, EV sales continued to increase globally. And just in case you weren't watching this channel in March, April, May, June 2020, somewhere around that time period, I did actually predict exactly this. You don't need to be a genius to understand that superior, disruptive, innovative technologies will gain traction in times of turmoil. And we can see here, pre-pandemic, gas-powered vehicle sales were down 4% year over year, EVs up 16% year over year. During the pandemic year, we see an accelerant of this transition towards EVs. Gas-powered vehicle sales down 15% year over year, electric vehicles up 33% year over year. Extrapolate into the future. Exactly. Wright's law has modeled the decline in battery costs successfully. According to Wright's law, for every cumulative doubling of units produced, battery cell costs will fall by 28%. The largest cost component of an EV is its battery, so these cost declines are critical to reaching price parity with gas-powered vehicles. And look at these consistent, predictable declining battery costs over time related to production volume. Remember, currently there's only a few million EVs produced annually. Every doubling, ARK's predicting battery costs come down by about 28%. This is enormous. This is the key difference between an internal combustion engine and a battery-powered vehicle. The internal combustion engine vehicle has already gone through this cost decline now. There's diminishing returns. They basically don't change year over year in terms of how much they cost, whereas battery costs are plummeting over time. In addition to cost, EVs are competing on range and performance. The auto market is undergoing a shift both to electric and autonomous. ARK believes that traditional automakers lack the software and electrical engineering talent necessary to succeed. And this guy also believes that traditional automakers lack the software and electrical engineering talent and many other attributes like good quality leadership, vision, and competence in general to succeed. RIP legacy automakers. Now, this is a really interesting chart that we're looking at here. On the left, we've got EPA range per kilowatt hour. Basically, based on the size of your battery pack, how far can your vehicle go? And along the bottom here, we've got acceleration. And ARK is actually showing the electric vehicle efficiency versus performance on a bit of a trend line. Generally speaking, the more efficient your vehicle is, the worse the acceleration here. So, most of these vehicles follow this trend line. Makes a whole lot of sense. Why are the Tesla vehicles outliers? Why are they not following this line? Well, that's because the Tesla vehicles have insane acceleration and incredibly efficient range per kilowatt hour. This is a visual representation of how much further ahead Tesla are in terms of their technology in electric vehicles, and another of the various reasons as to why I think most legacy automakers will not survive the decade. At today's battery prices, cell-to-vehicle technology enables longer-range EVs at lower prices. Cell-to-vehicle designs increase the volumetric density of batteries by 50% relative to battery cells integrated into modules and packs. In the mass market segment, cell-to-vehicle technology should enable EV makers to lower energy density and costs, producing more kilowatt hours to increase the range of vehicles. At a given battery pack size, cell-to-vehicle technology should enable longer range vehicles at lower price points. We can see a graphic over here comparing the different techniques. So traditionally, how most automakers manufacture EVs today, they buy battery cells typically from Panasonic, LG Chem, CATL, etc. Then those batteries go into a module. So the cells go into a module. Then the modules go into a pack. Then the pack goes into the vehicle. Lots of parts, lots of processes, all of them are necessary. We've seen at Tesla's Battery Invest today, they unveiled their cell-to-pack technology. Now, the battery cells go directly into the vehicle. Note the caption, how leaders, aka Tesla, in the space are manufacturing EVs. I just want to take a moment here to expand on the innovation that has happened with the cell-to-pack technology that Tesla unveiled at Battery Invest today. Not only cell-to-pack, but also the new battery cells from Tesla. Tesla is literally driving the battery cell industry forward. Get it? Driving because... But seriously though, Tesla is single-handedly driving the battery cell industry forward, okay? Now, Tesla, you might think of them as a car maker, an automotive manufacturer, maybe a tech company, maybe a software company. Who knows what you think of Tesla? How is it that Tesla, a company that didn't specialize in battery cell production, they were buying the cells from others and then assembling them into packs and modules, how is it that in the span of just a few years, Tesla has put their big engineering brains to the problem and developed a way to halve the cost of battery cells and push the industry forward by a quantum leap? How? I'll tell you how. They've got the best big brain engineers, the best leadership, and an inspiring mission. It is a winning combination. I really want to stress how important this is. When Tesla applies their big brains, their talent, to solving a problem, they tend to solve the problem and embarrass the entire industry within which that problem actually exists. Just imagine the next thing that Tesla decides to focus on. And the next thing, and the next thing. It's only a matter of time. If Tesla had infinite time or more engineers, they would be able to solve more problems faster. We've seen this with their self-driving chip design. We've seen this with manufacturing processes like the gigapress with the gigacasting as well. This is huge. The octovalve heat pump. We've seen many examples of this. When Tesla looks at a problem, you know what? This is bullshit. We're going to do this way better, way more efficient, way cheaper, way smarter. Let's do it. That's exactly what happens. Just imagine in the future when this continues to happen in other areas, different technologies, etc. Sizing the opportunity. If traditional automakers overcome obstacles, and boy, is that a gigantic, no, colossal if. Global EV sales could scale roughly 20-fold from around 2.2 million in 2020 to 40 million by 2025. Look at this. In the span of 4 years, if traditional automakers can keep pace and actually survive the transition, this is what ARK's projecting. This, 40 million EVs in 2025, in 4 years' time. ARK expects that sales of smaller, cheaper neighborhood electric vehicles will rise dramatically as a share of total EV sales. Wholeheartedly agree with ARK Invest on this point. In fact, see this bad boy, the Wuling Mini EV? Tiny little two-door electric vehicle, priced from $4,000 to $6,000 USD approximately. This is a tiny city car. Guess what? Here's a list of the best-selling electric vehicles in China throughout 2020. Tesla Model 3 number 1. Got to take a moment there just to appreciate that is an astonishing feat. But look at the Mini EV. It's close. It had a 9% market share. Tesla's Model 3 had 11% market share. Almost 120,000 of these things sold. Incredible. Why? Because there's huge demand for this kind of vehicle for people that live in high density cities. They either don't have a huge amount of space, can't afford or don't need a gigantic car, just something to get a few kilometers here or there, very short trips. This is a perfect car for people that reside in high density cities. And I think this is an enormous part of the market that Tesla's not even going to bother going after. Why? In a nutshell, Elon Musk in the past has been very clear he will not make an unsafe vehicle, and we just have to be honest about it. In terms of the physics of a collision, if you're in this thing and something with a higher mass hits you, you're fucked. It doesn't matter how much safety equipment you do or don't, hence the budget price having this vehicle, you're in trouble. Tesla is not going to dabble in these death machines on wheels. And by the way, I'm not hating, I'm just explaining. This is the physics of the matter. The point is, there is a huge market for these tiny, compact, low range, low budget, and low safety electric vehicles. In conclusion, Tesla is going to dominate the electric vehicle marketplace and legacy automotive manufacturers are screwed. And now, the next section, autonomous ride-hailing. Autonomous ride-hailing is likely to dominate urban transport. We believe autonomous ride-hailing will reduce the cost of mobility to 1/10 the average cost of a taxi today, spurring widespread adoption. ARK's research suggests that autonomous ride-hailing platforms will generate more than $1 trillion in profits per year by 2030. One more time. ARK's research suggests that the autonomous ride-hailing platforms will generate more than $1 trillion with a T, trillion dollars in profit per year by 2030. In addition, automakers and fleet owners could enjoy profits of $250 billion and $70 billion respectively. In other words, this is a fucking gigantic opportunity. And honestly, this opportunity is so enormous, the implications so profound, that I don't think most stock investors are willing to accept these conclusions. That's ridiculous. There's no possible way that they could... No, that's just not even... Well, time will tell, but I'm siding with ARK Invest on this. When you have such a transformative change in total cost for a mode of transport, a product, a service, anything, there's that tenfold decrease in cost or 10x increase in utility, you've got a huge disruption on your hands. Nobody could have predicted the huge impact of the internet. Nobody could have predicted the full impact of the genomics revolution we're now seeing. Nobody's really predicting the full impact of autonomous vehicles either, in my opinion. Autonomous ride-hailing is likely to be affordable. Adjusted for inflation, the cost to own and operate a personal car has not changed since the Model T rolled off the first assembly line. ARK estimates that, at scale, autonomous taxis will cost consumers 25 cents per mile, spurring widespread adoption. Now this is a pretty staggering graphic to show that the cost of personal transport per mile basically hasn't changed when adjusted for inflation since 1934. But to be fair, the features, functionality, performance, safety, etc. of vehicles has increased over time. It's not like we're making the exact same things we were in 1934, just for context. But to keep this in mind, the cost of personal transport's basically been in a state of equilibrium now for close to 1 century. Autonomous vehicles are about to change that. Huge decrease in cost. This is going to be enormous. Robotaxis should expand the ride-hailing market. According to ARK's research, the ride-hailing market today generates roughly $150 billion in revenues globally, with take rates of 10 to 30% and profit margins as high as 50% in high-performing cities. Likewise, autonomous ride-hailing could generate 50% margins, but its lower price point should expand the total market from $150 billion in revenue with take rates up to 60% to $6 to $7 trillion by 2030. And over here, the economics of ride-hailing versus autonomous ride-hailing, we can see the cost comparison, the price per mile for consumers for ride-hailing in 2020, $1.85 per mile versus the price per mile for consumer of autonomous ride-hailing, around $1 per mile, while maintaining the same platform costs and a very comparable margin. So, I mean, as a consumer, let's just say theoretically, you've got the option of paying almost twice as much for a vehicle driven by a human, or about half the price for a vehicle that's autonomous. Now I understand that not everybody's going to feel comfortable initially, but let's be honest, money talks. This is going to drive the adoption of autonomous robotaxis, and unfortunately for Uber and Lyft, unless they can figure out a solution to autonomy themselves rather rapidly, cause a huge amount of pressure on ride-hailing companies that do not have their own fleet of autonomous vehicles. RIP. 3 autonomous strategies are evolving. And in my opinion, only one of them is going to survive the pressures of natural selection, which yes, does also apply in the business world. Tesla's approach is camera-based, with less accurate sensors than LiDAR, making the path to full autonomy a more difficult problem to solve. Cameras do not rely on HD maps and should enable much more scalable service. Tesla's could be the first autonomous taxi network to scale nationally. We'll come back to this in a moment. Alphabet's Waymo is using LiDAR and HD mapping, aka training wheels in a sandpit it cannot exit. Waymo launched its autonomous network in Arizona, but probably will need time and significant resources to scale nationally. I concur. Many Chinese players, including Baidu's Apollo, are building out infrastructure sensors to help vehicles identify road signs and traffic. Requiring large infrastructure investments, this approach to autonomous ride-hailing seems to be the most rigid and least scalable of the three. Now, I've discussed in the past the differences between Tesla's vision, camera-based system and using LiDAR. LiDAR, unnecessary, it's a temporary shortcut, it'll look like you're making further, faster progress sooner, but you'll never get to the ultimate destination of having a generalized solution where you can pick up a vehicle, drop it on any road on Earth and it knows what to do. The Waymo approach is, well, once we know that we can safely map and monitor and know every square inch of this tiny little area, then we can safely allow our vehicle, using its training wheels, the HD mapping, etc., to go around here safely and not kill people. But if you pick that car and drop it off anywhere else, it's at best a death machine on wheels. Now, I want to really emphasize this, because in the short term, it's going to look like LiDAR-based solutions are further ahead at solving full self-driving, but it's not a long-term scalable solution because it's not generalized. Tesla's going for a generalized solution. This is smart. Most others are going for a narrow solution. This is not a wise thing over the long term. In fact, Tesla, once they solve full self-driving in their vehicles, will probably be able to use that same software and adapt it for all kinds of other things, all kinds of different autonomous vehicles, not just cars, drones, ships, everything you can possibly imagine. So, the opportunity here when Tesla does solve full self-driving and has a general solution to vision-based mobility, oh boy, things really change. The graphic here is suggesting that ARK believes Tesla has the slowest solution, but the most flexible and scalable, which over the long term is exactly what you want. Speaking of scalability will determine the pace of autonomous ride-hailing adoption. If Tesla launches its autonomous ride-hailing service successfully in 2022, ARK estimates adoption could approach 20% by 2025. If Waymo or GM is successful, good luck, adoption will probably be limited to 1% during the next 5 years. We can see here some projections. North American autonomous vehicle adoption as a percent of urban miles traveled. Very important, right? It's not just how many vehicles that are autonomous, it's total miles traveled. Down the bottom here, ARK assigns a 30% probability that Tesla will launch autonomous ride-hailing successfully. If so, we can see the huge difference between adoption of Tesla's autonomous vehicles versus Waymo. Demand response could be higher in developed versus developing countries. We believe autonomous ride-hailing will undercut the cost of human-driven ride-hailing by roughly 90% in the US and 50% in China. Key difference there, I think, generally speaking, is just the difference in wages, in salaries that people are paid and expect in those different regions. A human-based driver in the US is being paid more, therefore the higher cost. You get rid of that driver, means a much bigger discount in total cost, versus in China, lower pay for driver means a lower change in cost when you can eliminate the driver, but still a dramatic difference. As a result, the demand response to inexpensive autonomous travel could be higher in developed countries than in developing countries. Platform providers or companies that own the autonomous technology stack should garner the lion's share of autonomous ride-hailing profits. Now, one more time. Platform providers or companies that own the autonomous technology stack, the software and the hardware, the vehicle and the full self-driving software, should garner the lion's share of autonomous ride-hailing profits. Tesla, anyone? Human ride-hailing versus autonomous ride-hailing average price per mile in China versus the US. You can see the 50% reduction here in China versus the 88% reduction in the US. Massive. And now the moment you've all been waiting for, the numbers. ARK believes that autonomous ride-hailing platforms could generate more than $1 trillion in operating earnings annually by 2030. $1 trillion. Auto manufacturers with successful electric vehicle platforms partnered with autonomous technology providers could generate roughly $250 billion in earnings annually by 2030. Fleet owners that own, house and maintain autonomous ride-hailing vehicles could generate roughly $70 billion in earnings annually by 2030. Enterprise value for autonomous platform operators could scale to $3.8 trillion by 2025. And here we have estimated operating earnings across the autonomous value chain. Basically, that just means profits for these companies. Platform providers in 2025, around $190 billion. Automotive manufacturers, around $40 billion. Fast forward just 5 years after 2025, look at the growth. 1.2 trillion, 250 billion, 70 billion. This is what disruption looks like. I hope you guys have enjoyed this video. I really want to emphasize the fact that the opportunity in front of Tesla in the next 5 to 10 years in terms of both electric vehicles and autonomous ride-hailing, aka Robotaxis, is colossal. And despite the fact that Tesla stock has gone on a phenomenal run over the past 12 months, more than 10xing in value, today, I still believe the stock market isn't fully appreciating or pricing in the enormous opportunity that Tesla looks destined to absolutely dominate. In my opinion, Tesla is in the pole position to dominate 2 multi-trillion-dollar industries in the next 5 to 10 years. This matters. In my opinion, this disruption is just around the corner and nobody is fully appreciating the scale of the opportunity. So let me ask you guys a question. In 2022, will Tesla's first Robotaxi fair take place? Yes or no? Let me know in the comments below. And if not, what year do you think the first Robotaxi fair will take place on Tesla's own network? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.